Cheers.
Okay.
Good afternoon, ladies and gentlemen. Welcome everyone, and thanks for joining this Q1 FY26 earnings call for Infobeats Technologies Limited. The results are available on the stock exchange. In case anyone do not have a copy of the same, please do write to us, and we'll be happy to send over it to you. To take us through the results of this quarter, we have with us co-founder Mr. Avinash Sethi and Mr. Siddharth Sethi. We will be starting the call with a brief overview of the company's performance, and then we will allow the Q&A session. Kindly ask your question by raising your hand after the brief overview by Avinash is over, and then we will address all the questions one by one. I would like to remind you all that everything said on this call reflects any outlook for the future. It can be considered as a forward-looking statement and must be used in conjunction with the uncertainty and risk that we face. These uncertainties and risks are included but not limited to what we have mentioned in the prospectus filed with the SEBI and the subsequent annual reports. The said note, I turn over the call to Mr. Avinash Sethi. Over to you, Avinash.
Thank you, Surabhi, and thank you everyone for joining this call. Let's begin. Go to the next slide, please. So we have been transitioning ourselves from a digital transformation company to an AI-led data engineering company. We also added a good number of people in this quarter. So we are now 1,450 plus team, and we are present in so many geographies. Just a word of note, we have closed our Vadodara office because it was not yielding the right results. We are now in 4 offices in India: Indore, Pune, Chennai, and Bangalore. And in Europe, in Frankfurt, in Middle East, in Dubai, and US, and Silicon Valley, and New York. A quick roadmap for those who have not seen this earlier. We have grown from, we are a 25-year-old company now. We have grown significantly in last 10, 12 years. We got listed in 2017, acquired a company in 2019 in the US, acquired another company in 2021 in Pune, and reached a 400 crore revenue last year. And we have Anish Murthy as an advisor to the board, and we have also Opal Perry as independent director, who is a CTO of EasyJet in London. And Harmeet Bhatia has joined us as a CRO early this year. So we are investing in growth, again, investing in strategic leadership guidance, and we are building the business step by step. Next, please. A quick snapshot of what we have been able to achieve over the years. We are a company that has a very strong relationship with our clients, a lot of repeat business that we generate. We have been successfully acquired 2 companies. A lot of members, more than 10% of our population is with us for more than 5 years. That's a novelty in the IT industry. We did 2 buybacks to reward our shareholders in 2021, 2025. Also, we have a very large base of enterprise clients. That is another USP for Infobeats, where we continue to deal with Fortune 500 companies and very large enterprises that allows us to generate repeat business with them year over year and expand into those accounts year over year. That also helps in strong business relationships and lesser sales cost for us. We are a cash-rich company, and we have a very good CAGR in revenue since 2021, at 2%. We also thrive on partnerships, and we are partners with very large enterprises like Microsoft, Salesforce, ServiceNow, Agenio, and Microsoft Azure as well. Continue to receive a lot of awards over the years. One award which we are particularly proud of is we are named as Best Companies for Women in India for the last 3 years. Next, please. Some transformation here. We are now focusing on 3 main technology areas: AI-led engineering, Salesforce, and ServiceNow. And we are also focused on 2 business verticals, BFSI and storage and virtualizations. So these are the 5 areas that we are strongly building our capabilities and strength over the last, I would say, few quarters. And we are also seeing results in terms of how we are able to penetrate these fast-growing spaces. Next, please. Quick snapshot on the team here. The founders on the top and the independent directors at the bottom. We have Opal, Mayuri, and Sumir sir as our independent directors. Very strong leadership here. Harmeet Bhatia, Ram, Geetanjali, Manish, and Tarulata, they've been with us for so many years and they are contributing to the growth in many areas. On the delivery side, we have Amit, Dennis, Rajagopalan, Kanupriya, and Arpit. So the clients here, unfortunately, we can't name most of them, but just to give you a glimpse that these are like Fortune 500 companies and some of the names that we can put on the top, they are very, very long-term relationships for us. So we are very proud of growing with them over the years and also being able to align their new age technology requirements with our delivery abilities. A quick snapshot on the financial update. This is a summary. We'll go to the detail in the next slide, but a quick snapshot here. 124 crores in revenue. A word of caution here. We have 6 crores of employee retention credit from the US government that was given during the COVID times. We applied for it in 2022, but received in last quarter. So, there is a revenue shoot up from the extraordinary income. But despite that, if I remove that, also we have a decent growth in terms of YOY change from June 24 to June 25. EBITDA is already showing a reduced number here. So 30 crores for a right comparison between EBITDA numbers over the years. So 30 crores versus 19 crores in June 24, a 58% growth. We are very happy with that. And PAT also has grown significantly from 8 crores to 23 crores. So quite a jump, quite a good outcome in terms of what we've been trying to do over the last few quarters. We're trying to do team improvement in the team. Go to the next slide, please. Improvement in the team utilization levels, cost optimization using AI, both internally and externally, to reduce the cost and improve the efficiency levels. So we have a little bit more detail on how much was the revenue from the operations, total revenue, EBITDA, and then EBITDA margin has improved from 19 to 25%. This is excluding ERC. So that's a real business margin. And PAT from 8 to 19%. So there is a good revenue growth, and most of that growth is drilling down into the EBITDA and the PAT numbers. So our clients are growing, and we are building momentum in all the 3 geographies that we are working. Next, please. A quick breakup between Infobeams and Infobeams Cloud Tech. By the way, this Cloud Tech will go away in a couple of quarters. We applied for a merger, so this will not be reported in future. In the geography terms, quite a significant improvement in the European side of the business. We have about 28% contribution coming from Germany market, mostly Germany market. USA is 57%. UAE has also grown to 9%. And the rest of the world, including India and APAC, is 6%. So there was a conscious strategy of reducing India business and focusing more on the overseas side. Also expanding consciously on the European side of it, so that we balance the uncertainty from the US market. It's just going in the right direction for us. So buyback was announced last quarter. It was executed and it was completed. Promoters did not participate, even though we were eligible. We wanted to reward our shareholders, and this was we returned about 10 crores of cash to the shareholders. We'll look at the question answers in a few minutes, so please hold. A dividend has been announced in the last quarter, which will be released probably in the month of August, and the record date is set as 25th July. annual report is published. You're welcome to revisit this. So if you can just click the link and show the PDF, can we do that? Just click. That's screen share.
Yeah.
Okay, we can just come back to the screen. Come back to the screen. So here's the link. It is available on the website. Please feel free to review that. We have an AGM on 15th. 15th AGM on the 4th of August at 4 p.m. in Indore. So quick business updates. We've received more awards. 10th time named as Dream Companies to Work For, and 7th time as World MP's Best Employer Award. We constantly attend conferences. This is an annual event from ServiceNow, so we got to be there. We had significant presence there, and learned and understood the new trends that ServiceNow is bringing for their customers. Same here with the world tour of Salesforce in Dubai. We are investing in AI and data and technologies. So Databricks is one of the emerging partners in that ecosystem. So we are investing there. Harmit, our CRO, was part of that event. We organized an AI hackathon in Infobeams. 100+ members participated, and we got a few good ideas to explore further. The CSR activity, we are proud to say that we got the most impactful employment generation award for the work that we are doing at Infobeams Foundation. This was given a month ago to us by Narayan Seva Sansthan. A new batch that we completed in the Infobeams Foundation. These are all underprivileged kids that we are training for free for a year. And eventually the idea is after a year of software engineering training, they would get a job. And 90% people get placed in IT companies out of this course. We plant trees on birthdays of every team member. So we planted 332 trees in last quarter. And we also did a lot of activities on Environment Day, like seed ball making activity, carpooling day, no iron day, and so on. We are ISO 9000 certified for quality management, for information security, environmental management, and occupational health and safety management systems for all our offices. And we also have initiated a specialized leadership program for our budding women leaders in the company. And this is the second batch that we have launched. It's a year-long program. About 30 members from the women leadership attends this, and they really grow in their career after this course. Market data, which most of you are aware of, this is as of 30th of June. Market price was 379. The market cap was 900 crores. So the promoter shareholding was 74.4 and public was 25.6. Next, please. That's it. Thank you so much. We are open to question and answers, and I will let Surabhi drive this.
Yes. So thank you, Avinash. So now we will begin with the question and answer session. Participants are requested to unmute themselves only when it is their turn. Please limit your question to one at a time. You are welcome to rejoin the queue for the follow-up questions if the time permits. Thank you for your cooperation. So let's begin with the first question. The first question is coming from the line of Mr. Ankit Kumar. So Ankit, please unmute yourself and proceed with your question.
Hello, sir. Am I audible?
Yeah, Ankit.
Yeah, great for a great set of numbers, sir. Congrats for that. Sir, my first question is, you said we have a lot of repeat customers. So in terms of this revenue number, of 112 crore of this quarter. Can you comment how much is basically repeat customer thing which we expect, annuity type of business which we expect to come? And a linked question is, this quarter we have grown sales quite well, which was not happening in any of the previous quarters. So can you comment how is the demand environment, what happened this quarter, and on continuity of that, please?
So, Ankit, thanks for asking this. I'll answer the second question first. So it's not that this magic happened in just this quarter. We've been building the momentum quarter over quarter. So if you look at last 3 quarters, the numbers are inching upwards. And what has happened, particularly in this one, is a lot of those efforts have started to materialize. And with the AI interjections that we are offering to our customers, where we are implementing certain accelerators, we are giving them certain prototypes on how we can expand into using AI tools. Things are looking positive. And the other thing is that the European market has shown a very good traction, where we are getting new clients as well as expanding into the existing ones. So all of these combination has led to improvement. And I keep telling in all my quarterly calls that we are also working towards consciously increasing our rates, consciously cutting the tail, consciously improving on doing the cost optimization efforts. So I think it is not just one thing that has happened. It is the combination of all of these that has yielded the results that we are aiming for quite some time. So yes, we are seeing good growth in all the top clients, I would say. And the repeatability is not an annuity kind of a business. We are not into SaaS, where we have a subscription and we get repeat business from our customers. What I mean by repeat business is we work with the same clients on new projects, or we expand into the clients and we generate more revenue by various means. One is expanding into more departments. The other is giving them a flavor of new technologies and new tools and new technologies, and try to expand into existing divisions as well. So software is something like you wanted more, you cannot live with less. And therefore, these businesses, if we can generate more outcome for them, and they'll be happy to adopt more software and more technologies for their business. So this is where I would say the business from existing customers have been higher for us. And if we were to break it up, I would say maybe Siddharth can give you more idea. Would it be?
I'll try and explain. So repeat business means that 95% of our customers stick with us. More than 95% of our customers stick with us. As Avinash said, that we create a very strong bond. These customers stay with us for a very long term. So the customer churn is very, very less. And that is one of the key aspects of our, whatever success we have seen. We really believe in very long-term relationships.
Basically, to say this type of.
Let us come to the counter question later on. You can rejoin the queue, Ankit. I think
maybe this is just a follow-up on that same question. Basically, so you are saying that this kind of number will continue, will only improve from here in the coming quarters. Am I right?
That is the hope. Yeah, that is the hope. That is what we are trying to see. Not only improve, improve in good measure. That is the hope. I don't know if we can say that it will definitely happen, but that is what we are trying to do, and that is the efforts that we are trying to put in. Thank you so much, Ankit.
Thank you, Ankit.
Thank you.
It is coming from the line of Mr. Dilip. So, Dilip, please unmute yourself and ask your question.
So, hear me? Am I audible?
Yes.
Yeah, hi. Avinash, congratulations, fantastic set of numbers.
Thank you.
Just want to know about your US, Europe and Canada. Last con call, you talked about some initiatives you have taken. And can you just dig a little deeper into how those initiatives are, are there some initial, green shoots, coming from Europe? And the corollary is, what is your Arrowhead in Europe and Canada?
What was that? If you can repeat.
The Arrowhead, what you're selling? Are you selling the traditional
Arrowhead.
IT services, or is there some unique Arrowhead
Sure,
you
sure.
have, beachheads you have?
Sure, I'll take it partially and then I'll ask Siddharth to help here because he looks at the European market. The Canadian thing that I talked about last time was more around we've got good clients there, and it's combination of a product that we have. I would not say it is a full product. It is a accelerator called as Stanza. So Stanza is delivering some good results in the SDO space. SDO is Standards Development Organization space, and it is kind of a ready-made few steps of a tool that is required by each of these companies in the SDO space. So Stanza is working out fairly well as a door opener in the SDO space. Now we have got a couple of clients in the Canadian market on the SDO side using Stanza. And second thing that we're doing is we have another accelerator in the AI space called as Expona. And that Expona, which was earlier named as Culo, now it is renamed as Expona. So Expona is being prototyped or being deployed at a couple of clients in Canada. And that has also shown very good traction where we are seeing positive outcomes of that AI initiator using Expona. So both Stanza and Expona are accelerators that we have built in-house, and we are able to generate business and good expansion possibilities within those clients. So that is the Canadian part. For the European part, I'll let Siddharth speak about as to how we are able to, what is the Arrowhead in the European market.
So Infobeans in general has pivoted to an AI first strategy. We have taken a very conscious effort in the last 2 and 3 quarters to make sure that our AI strategy, our AI implementations really take off, not only to reduce cost, which is of course a very primary aspect, but also to help us increase revenue. And that has become one very important and sharp arrowhead, not only in Europe, but across our entire offering. So Avinash talked about Expona. This is an internal product, almost like a product that we have built that we can take to our clients, ready-made, almost ready-made, customize it a little bit and start implementing that. And they see almost immediate gains and immediate results. The second very important arrowhead for us has been ServiceNow. And most of our European operations, European sales and revenues come through a ServiceNow first and AI first strategy. So when we go and talk to our customers, we talk to them about ServiceNow, and then we try and expand into other areas, including but not limited to AI, Salesforce, and AI-led engineering. So ServiceNow, AI, and design, these are 3 broader sets of things that we go to our clients with, and we are seeing very good results. And this is not just Europe, this is across the board. I think no conversation happens without the mention of these 2 letters, A and I. I hope this answers your question.
Great. Yeah, it does.
Thank you.
Since only one question, I'll come back in the queue, but I have got a
Please.
very important second question now. Thank you so much.
Please do come back.
Thank you.
Thanks. So next question is from Mr. Yogesh Periwal. So Yogesh, please unmute yourself and ask your question.
Yeah, hi, sir. That was a very good results which came out. Also, my one question is that the year-on-year revenue growth was 23%, but the profits grew by more than 200%. Can you comment what led to this such a good margins?
So this is also a result of our optimization around our team, but very importantly, we have started using a lot of AI in our implementation. So we are able to do the same amount of work or more amount of work with the same amount of people, lower effort. So
Okay.
both these combinations plus a very good cash management, a very good AR management, a very good treasury management, so all of these things combined are helping us in our cost optimization. We're not in any sort of cost reduction mode. We are investing very heavily into our team, very heavily into AI, very heavily into training our team to use AI across the board. We have implemented AI LLMs to help our team deliver more, even in sales, even in the people function. The way we are interviewing our potential candidates, the way we are assessing, evaluating our potential candidates, almost everything we have made AI first as a strategy.
And then I think in terms, what is happening is, the business needs a certain amount of, say, threshold, both in terms of revenue and expenses to run. Now, what was happening is we were unable to break that threshold in the past. And now what is happening is any additional revenue that comes up is directly, distilling down to the profits. So
Okay.
I think margin, turnaround looks like, but nevertheless, as Siddharth mentioned, all of these combination has worked in the favor.
Are there any big projects in the pipeline, and can we see this margins growth like in the also in the continuous coming years?
See, I keep maintaining in the past also that, for a business like ours, 24% EBITDA margin and a 14-15% PAT margin is a healthy margin. And that usually is the goal and the target for us. Now, there are times when it might cross those numbers, by a margin, but, eventually it will catch up in, 1 quarter, 2 quarter here and there. But on a yearly basis, we aim to get that kind of a margin levels.
Also, we are investing very heavily in growth. So sometimes you might see a dip because we, for example, hiring a lot of salespeople now in the US and Europe. We just have increased our sales team by 3-folds in the US. And this margin improvement gives us that confidence that we can invest in our future growth. We are investing very heavily, as I've already said, in AI. And our frameworks, our products that Avinash talked about, Xpona, they require some effort. But we are very happy to invest in that for the future, and happy to say that it's a very forward-looking sort of a product that customers are really very happy about. So these investments will come, and again, given the kind of cost management and treasury management that we are doing, it just gives us all a lot of confidence that we can continue to focus and invest in these areas.
So thank you,
Thank you.
Yogesh. I think we need to take another question. So next question is from Mohit Luthra. Mohit, please unmute yourself and ask your question.
Hello, hi, can you hear me?
Yeah, right.
Thanks for the opportunity and congrats for the results. My
Thank you.
question is around the focus areas where you mentioned that Salesforce, Agentic AI, ServiceNow. My first question was, are you also exploring some of the similar key focus areas in the future? If yes, what are those? And second, that now in the Agentic AI, I also wanted to ask that you mentioned customer is asking that with the AI adoption, you reduce the cost also. Now, whether this strategy will impact us also in the future, that we are giving Agentic AI and in turn, they'll be paying us less also in the future, maybe due to more optimizations. So how it gonna basically impact us, or do you see growth in that? What's your perspective in that? Yeah,
The
please.
cost reductions, helping our customer reduce cost, not on the IT side, but on their operations side. That is the whole point of Agentic AI. So hopefully, the more we implement Agentic AI, the more they will come back to us and say, okay, we need more bots. So
Okay.
if their operations do better, they perform better at a lower cost, they are then able to free up their money to invest in their future, which of course cannot happen without technology. So, I mean, that is how the world works, right?
Yeah, that's great. Thanks. The first question, yeah, can answer. What are the focus areas you are exploring?
Focus areas for right now, see, AI is a very big focus area. And within AI, we have ServiceNow and Salesforce. These are two areas which obviously they use a lot of Agentic AI. Now Assist is a big part. We have just signed a deal with a Fortune 500 company on the Now Assist part, which is the AI piece of ServiceNow. And we continue to invest. So these two big buckets, along with an overarching AI-led engineering umbrella, this is what our immediate focus is going to be.
Yeah.
Plus, internally, we are going to continue to develop our accelerators around AI.
Yeah, just to add, we are looking at more companies to partner These are like Databricks is what I mentioned earlier in my presentation. Windsurf is another that we're trying to look at in terms of closely working with them. And then there are more alliances that we're looking at, like Whatfix I mentioned a couple of quarters back, that we are actively working with them in terms of being their implementation partners and also take AI to them. So these are those partnerships and alliances that we're looking at to further expand into the AI world.
Okay, that's great. Yeah, best wishes. Thank you.
Thank you, Mohit.
Thank you, Mohit. Next question is from Mr. Param Vora. So Param, please unmute yourself and ask your question.
Hello, good morning.
Good morning.
Congratulations on the quarter. And what I wanted to ask is that you have onboarded 6 new clients in Q1 of financial year 26. So could you provide insights on their strategic importance, the sectors they belong to, and their potential for long-term revenue contribution?
So every client is important to us. There's absolutely no doubt. I just want to tell our investor community today that our first client with Infobeats has been with us the entire journey. They gave us work when nobody gave us work 24 years, 25 years ago. So every single client is absolutely important for us. All the clients that we onboard now, they will have a long-term potential. Otherwise, there's no point in engaging. But we look at every client to try and help them improve their efficiencies, improve their processes, try and help them create a better customer experience for their customers, and try and increase their revenues in turn. So all the clients that we onboard, the 6 clients that we have, and the 100+ clients that we are working with over the past so many years, they are extremely important to us. And that is the only way that we can grow. We have to have a very client-focused approach. So yes, to answer your question in a short manner, yes, the clients are extremely important and we will grow with them.
Sir, can you mention the sectors which they belong to? Like
They belong to
BFSI?
manufacturing, they belong to retail in Canada, one of the largest discount retailers in Canada. Manufacturing, as I said, manufacturing of construction equipment, they are one of the top 3. 2 of them are actually one of the are in the top 3 construction material manufacturing. They have 100+ plants, one of them, and the other company is about 150 years old. So these are very, very top tier companies that we now interact with. Avinash showed you a slide earlier where I think it was a 30+ number of enterprise grade clients, and that continues to be our focus. But we will never leave our first client ever, hopefully.
Okay. Thank you so much.
Thank you, Param. So now the last question is coming from the line of Mr. Saurabh Bardia. Saurabh, please unmute yourself and ask your question.
Avinash, hi Siddharth.
Hi, Saurabh.
Congratulations for the excellent set of numbers after a very long time. I mean,
Thank you.
good improvement in the margins for a very long time, which we had loved to see. But I was going through all your numbers. So from 2014, this company has been doubling revenue every 3 years. But for last, I think from 22 onwards, the sale has been stuck in around, say, 400 crores of top line. So what constraints do you see? And with all the efforts, do you foresee in next 3 years these things to change with the same set of margin continuing? And how do you see, company going forward? Because we are stuck in a range of say 400 crores of revenue for last 3-4 years.
So you're right, Saurabh, and I think in last few quarters we did comment on those situations. So it is a long effort in terms of coming out of that orbit, but I would not complain about it. I think what has happened is there's a lot of rechurning happening within the organization, within the clients, within the geography. We've recently seen the turmoil after the COVID. So I think I'm happy that we've sailed through that situation. We have emerged as a transformed company both internally and externally. We have people like Fanish Murthy, we have people like Opal Perry, we have Harmin Bhatia. So there's a lot of strategic direction that we have taken over the last few quarters. I would say, at least 5-6 quarters, where and with the results that we've delivered in this quarter, I am happy to say that we are going in the right direction. We are able to generate, the margins that we always aim for, and there is no doubt in my mind that we will be able to maintain it in coming quarters or coming years. As Siddharth also mentioned, one quarter here and there, 2 quarters here and there does not affect us because we know the long-term direction of the business. As you have also seen that in fact, it is since 2012 that we've been doubling ourselves every 3 years. And I also mentioned and accepted the fact that we did not grow in last 2 years. But if you look at 21 to 23, we doubled in 2 years. So, and at a certain point in time, you perform very well. At a certain point in time, you do not. So you learn from them, those things. You take new steps, you take new measures, and you try and work in the same direction. So I think that is what has happened for us. I'm sure this year we'll be able to break that stigma of 400 crores. But I think we're in the right direction with all the pivoting, all the changes that we are seeing in the organization and the outcome that we are seeing. We are headed in the right direction.
I think the trailing 12 months, if you see online in some of the websites, the trailing 12 months is already significantly beyond the 400 crore mark. So hopefully we'll continue to grow. Thank you for
I'm sure. Can I add up
There's one more thing I'd like to add here also. Avinash showed a slide where we have, I think, 230 odd crores in the bank. And the intention is to put that to good use internally also to increase our sales efforts and increase our capabilities on the AI front, but also to acquire. So we have a very clear intention to acquire the right company. You can go ahead and acquire a company today, but is it the right company? We're very, very conscious of that fact that the company that we acquire has to be culturally correct. Of course, all the financials have to match up, and definitely it has to add and create, 1 + 1 greater than 2 sort of an equation.
But with the kind of growth which we are having in the company, say organic growth, does this take the company from 400 to say 800,000 crore, or do you need some inorganic acquisition to do this? How do you foresee? I mean, for next 3-4 years, do we have a roadmap?
See, it is a combination of both the things. We are investing on the organic side. That does not mean that we will not invest in the inorganic side also. Inorganic is very subjective in terms of the kind of right fitment, both culturally as well as, actually multiple dimensions, culturally, financially, business-wise, the potential-wise, plus the valuation and all of those things, right? So it is a difficult match to find very, very quickly. We don't want to just do a financial math here that, join 2 companies and we have a higher revenue. No, that doesn't really work that way. So acquiring a business is easy. Integration of that is difficult. So we have learned from our acquisitions, and we are more cautious and conscious about what we choose. So it is going to take time, but nevertheless, our journey from 400 to 4,000 crores will not complete without acquisitions on the way. So it will happen.
Any serious discussion as of now?
No, otherwise I would have really put up a slide on the presentation. There is nothing that we are seriously into right now.
Okay.
But we continuously scout for it. We have a team that continuously searches for the right company, and at any point in time we will be evaluating 3 to 4 companies. So we are active in that space.
Yeah, thank you and all the best.
Thank you.
Thanks. Thank you. So I think Dilip and Mohit, they are in a queue again
Ankit
with the follow-up question.
Ankit.
Yeah, just to add, we just have 5 minutes more, so
Mr. Ankit.
let's be quick.
And Dilip is also.
Ankit and Dilip, yeah. Ankit, you can start.
You can unmute yourself and ask your question.
Yeah, had a follow-up. Thank you for taking that. Sir, in terms of employee cost, what time of the year do we take the increment hikes? And on this current run rate of 71 crore type quarterly run rate, what should we expect for the full year, please?
So, Ankit, what is happening is we have deferred our appraisals last year from March to October, and therefore the cycle for us will be starting October, which will be like 2 months from now. So that is one. We typically look at 10 to 12% of increment in the cost. So yeah, that will change for the remaining part of the year. All right.
So, Dilip, please unmute yourself and follow-up question.
Yeah, can you hear me?
Yes, sir.
In the last, 3-4 quarters, a lot of IT companies have optimized their cost structure to the max possible. Do you have any cost takeout lever still, which you think will play out in next 3 to 5 quarters?
Believe that is always the case. We will always find new avenues to improve the cost measures, cost metrics, and it is never done actually. That's a constant exercise that we do, and it's not just that we've been doing just 4 quarters ago. We've been doing it every time. Every time we find a new avenue and a new better way to handle the same task. So yeah, it will continue to happen.
Great. And you will balance that along with the investment priorities, right?
Yes.
Okay. Thank you so much.
Thank you.
So, thank you everyone for all the questions, and thank you for trusting us.
Is Mohit also there?
Yes, I would want to ask one question if my
Yeah, Mohit, go ahead, please.
thanks for the opportunity again. I wanted to hear about your thought leadership or point of view in blockchain. I see a lot of traction in US, Europe also starting. Even the BI standards are started doing some POC in tokenization. So I wanted to hear in terms of focus area, will you be exploring on blockchain or you don't see any value? Please.
So we did invest in blockchain in 23 and 24. And after 2 years of investment and efforts trying to sell that technology to our customer base, we found some traction, but not enough to retain a large team and continue to invest in that space. So we are out of blockchain as of now.
Okay, thank you.
Thank you.
Thank you.
All right. Thank you everyone for joining the call, and now you may disconnect your lines.
Thank you so much, everyone,
Thank
for your
you.
trust in Infobeams, and we continue to hope to see you again quarter after quarter. Thank you so much, everyone.